Hey, good morning, everybody. So crazy important. That's why I have the SPY on the screen to start because I never start like that. So let's jump right into the SPY. Let me get to my chart. Now, what you could see is we were down at 374, 375. We gapped up. So I've got the 2 hour chart right here. So I'm not telling you the gap's going to fill today, but what do we know about gaps? We know that gaps get filled. So I'm showing you there's a gap right there. And I know people will say, and we're going to get into it, CPI is the reason. And yeah, I said CPI was going to come and cool and the markets would like that. So great strategy. What did I do? Exit out of my position too soon, but we'll talk about that in a minute. So CPI numbers came out. They were 7.7. It was zero point 0.2 tenths under what was expected. The market shut up. Now let's zoom out real quick and just talk about the psychology behind the market. Okay, because I just spoke about a gap that we just gapped up from. Now, psychology says all these companies that are missing earnings or just beating earnings, has anything really changed? Yeah, I mean, they could restructure their corporate debt, but what else has changed? Not much. All their forecasting going forward and supply chain issues, has anything really changed? Not really. So was that crazy pump yesterday? Oh, yes, but volume was there. Understand, the NASDAQ went up 7% yesterday. And people are like, well, it's popping this morning too. It's popping this morning. I don't trust it. I could show you my SPY chart. I'm pretty sure we're going to see an M. So at some point, yeah, we could go up higher on this bell curve, but I think we're going to come around. Why? Just my way of thinking, because not much has changed. All right. And let's not mention, we haven't even got into December, January, Christmas spending, credit card debt. I mean, if you're watching me and your debt is higher, make a comment on the side. Tell me I'm correct about this because people are spending more money, debt's going higher. Now, check this out. Interest rates on credit cards, all-time high right now, averaging 19.4%. They interviewed this family last night. I watched the whole thing. I mean, this is what's happening to middle America. So yes, CPI was perfect. CPI came in low. The NASDAQ went up 7%. Okay, understand, in a year, like a 14% gain would be off the charts. Great year, right? 7% one day. So don't get overly excited and expect exactly the same as yesterday. I'm going to mention certain stocks, but I'm going to tell you what happened. So 50 basis points is now the estimate for December from the Fed instead of 75. That is why the market shot up. I always speak about the two-year rate. The two-year rate, which was 4.7%, 4.72, is now 4.32%. It's down 40 basis points. The 10-year note, right? And this is important because all firms have to restructure. So yes, the market should go higher, but it was pretty gangbusters yesterday. I mean, outperformed what I thought it was going to do. And we'll talk about that. But they're expecting 50 basis points. All right, 10-year is at 3.81 right now. It was at 4.17, 4.30 like a week and a half ago. So yeah, I mean, you're talking about like 50 basis points. That's a hell of a move, all right? But it's now baked in. So you had the fake sell-off 2 days ago. Market dropped 2%, 7% it went up. I predicted yesterday 4.6%. I thought 2.6% because numbers were good, and then 2% that it was owed from the day before from that fake sell-off, right? So I was like 4.6. The fact that it went up over 5.5% on the SPY is a little ridiculous. It could be strong this morning. I'm not buying into it. I certainly would not be buying and chasing. Now, why? Because I haven't got that. We're going to talk about certain stocks. Short covering. Geez, was that maybe a factor yesterday? So we can talk about certain stocks, okay? And yes, the SPY is up 0.4% pre-market. I saw it as high as like 0.8%. I saw it as low as like 0.19%. Keep the ranges in your mind, okay? And we'll revisit that. But here we go. Yesterday, Rivian, 17.5%. Plug, 16%. Yes, I went into yesterday bullish on Plug. I crushed it, 100%. I left 100% on the table. I left 100% on the table. Who can say that about their trades? They're bragging about how great their trade was. They left 100% on the table. Only me. All right, Apple, 146. It split 145 like nothing. Up 8.9%. Yes, it's up 0.3% pre-market. I would not trust Apple. All right, UVXY took a tumble yesterday. Okay, AMC. We're talking about stocks that might have been short squeezed, okay? Or definitely had AMC up 18% yesterday. I get it, all right? Affirm. You know, I was in calls like a week ago. Affirm, right? Up 24% yesterday. Disney, which got sold off to $86, up 4% yesterday. Upstart, which had terrible earnings, up 27%. So if you're looking for a play today, and I'm saying, okay, the market could get a little dicey. I mean, I wouldn't expect what we saw yesterday. 7%, no. I would expect sort of a pullback. It mentioned Apple. I saw a tweet, and days that Apple performed the way it did, generally the next day it pulls back 1% on average. So that's what I would expect. If Apple's going to pull back 1%, the market's going to pull back a little as well. That only makes sense based on how high we went yesterday. And I'll talk about the SPY ranges, but I'm not done sharing crazy stock moves. Roblox, 9%. Lucid, after its terrible earnings, and it dropped like 14, 18%, up 8%. Amazon, we know is heavily shorted, up 12%, up 2% pre-market. Carvana, which was my worst trade of the year, and that was last Wednesday or Thursday. If I got in one day later, everybody would have killed it. I was freaking early, up 31% yesterday. 31%. Palantir, 9%. All right, DoorDash, 11% after Uber, 8.6%. Uber's still not an exciting stock. Airbnb, 7%. GameStop, 7 I mean, even the oils and the energies, which they were selling off, Chevron, Exxon, up and up pre-market. And again, energy's up. But wait, if energy's up, aren't we going into recession? So here's the great thing, right? Yin, yang. And I'm going to talk about volume in a second. But let's talk about COVID real quick. Let's talk about China real quick. I just heard there are a ton of cases in Beijing, China, right? We heard China might actually relax their COVID policy. So what's going to happen? New cases, China says, yeah, we're going to be more lax. Well, they only say we're going to be more lax if their economy is struggling. Let's read between the lines there. Why would China say all of a sudden we're going to be more lax? They wouldn't. Their economy is struggling. Chinese market was up like 7% the other day. It's following our market. I mean, identical. I would not trust Chinese companies. I don't trust the Chinese government. But here's the thing about COVID. So it's spiking over here. In the States, we have something called VSR or VRS or something like that. It's like COVID, okay? Then you have the flu. Then you have COVID at private schools in New York, New Jersey. I think they're recommending flu shots if you want to attend school. Public schools, they can't do that. Point is, it's going to happen again. China's going to have an outbreak. We're going to have an outbreak, whether it's COVID or people just say it's a bad flu or it's this VSR or whatever it is. It's coming. So we already know recession's coming. Again, I'm zooming out. Not talking about today, and I will get into today's range. But I just want everybody prepared. Please understand, we're still in a bear cycle. This is a bull run in a bear cycle. What we saw yesterday was over the top. I spoke to a buddy on Wall Street. Same mindset. We think alike. And I was like, psychology, what's really changed? And he's like, nothing. All this data that just got dropped yesterday, 7.7, we knew about a month ago. This is a month-old data. A month old, right? So now we've had 7 out of 11 down. The last 2 reports up. Yeah, that's great. Yesterday was a little outrageous. So let's get into this fight because I think COVID's going to outbreak, whether it's COVID, flu. Shoot, I was sick 3 times during that 2-year period, and it was pretty bad. So, I mean, I wish the best for everybody, but stocks are still going to struggle. I mean, Carnival, what was Carnival up yesterday? Maybe like 9 to 14%. It's same stuff's going to happen. We're just in a new year. People are talking about different things. We're talking about politics or whatever. All right. So one other thing before I talk about the SPY, which leads us into the SPY, is volume. Yesterday's volume on the SPY was off the charts strong. Every dip was purchased. Everything was streamlined up because everybody was on the bandwagon. People, institutional investors, okay? They don't get in trouble. If they ride down a position, they do not get in trouble. If they're in or out, they do not get in trouble. They get in trouble when they miss the ride up. If they're not in the market during a bull run, during the ride up, and that's what they're paid to do, they get fired. That's what they get in trouble for, okay? So understand, yesterday's run on the market, you've got institutional investors pushing the market higher. You have short covering pushing the market higher. I mean, 7% on the NASDAQ. It was the best day, I believe, in 2 years. And we've only seen, I think, 4 days like that in the last decade. Apple's value itself went up 180 billion. So let's talk about the SPY because I said it was coming. So here's where I made the mistake yesterday. My strategy was low CPI, bullish market. So why the heck did I exit out and secure profit by 10 a.m.? Because I don't trust the market. I mean, I got to get over that. That's too much emotion yesterday, but I'm like, they're going to pull the rug. They're going to pull the rug. And we all been there, right? They've always pulled the rug. So I like to take profit. Yesterday, I left 100% on the table. That's my bad. Still a good trade. I was still correct, which is important. But my entries and my exits are terrible. If you're on my Discord, which you can join below, you know what I suggest? When I get into an option, underbid me by 20%. You know, I bet $1.20. I get the contracts. I'm bragging about it, how I'm going to crush it. Discord below. Okay, so let's talk about the SPY ranges, all right? Going into yesterday, all right? We were at, 385 to, 394 yesterday. 9-point range, pretty wide. Remember, we gapped up, and let's show everybody what I mean when we gapped up. Because zooming out, I'm telling you what's going to happen. I've got the 2-hour chart. Zooming out, we always fill gaps. Look, we filled a gap here. We didn't fill that gap yet. Filled that gap, filled that gap, filled that gap. So the market always fills gaps. Now, if you're looking with me, okay, when the Fed came out the other week and raised 75 basis points, look at the volume. Do you guys see the volume? Ridiculous. Do you think that's fake volume? Yes. The past 2 days, great volume. Yeah, we ended and then we started. Great volume, gapped up. That gap is going to get filled. So what is that telling me? It's telling me I zoom out, okay? If the market wants to go higher today, this is a longer-term strategy. If the market wants to go higher today, I'm zooming out and I'm like, I know that gap's going to be filled. And people will be like, the gap doesn't have to be filled because CPI came in low. Gaps always get filled. Go back to the chart. Look at the chart. Don't rely on me. Ask the people that you follow on Twitter or wherever you follow. Ask your dad, your mom, your friends. Gaps get filled. Gaps get filled. That's the way the market happens. So zooming out, I'm going to say, all right, well, when the market finally tops out, and I'm not saying it's today, and we'll get into what I think is going to happen today, but when the market finally comes over and we see it coming over the bell and you know that it's going down, whether it's the Fed speaking in December, if we have to wait that long, so be it. Okay. But I'm talking about, and we're going into recession. And I just mentioned all my COVID fears and it's not my personal, it's going to affect the economy. I'm fine. Thank you. But that's all going to happen by February. So zooming out by February, we're definitely filling that gap. We might fill the other gap to 358, which we fill gaps. That's what we do. So that's zooming out. Now zooming in, let's talk about the SPY. And when I speak about the SPY, it's basically the market. It's the S&P. It's the SPY. All right. So ranges on the SPY. I mentioned yesterday before market, right? Before we knew the numbers, 378, powerful support, 381, 385. Okay. We opened it yesterday at 385. So that's not a surprise that we found support up there. I said pre-market when we were at 387 that at least we're going to go to 390. That's the next level higher. So silly me, I should have held at least till 390, would have made me much, much more money. But still, I led good. So 390 next step higher, next way higher, 393. What did the market do to 393? At the same time, Apple was approaching 345. The market and Apple shot right past it. It didn't give a shit. It didn't care. So the SPY went to 395. The market was strong. There was a little selling pressure towards the end of the day. But volume spiked, and volume spikes in the first 15 minutes and the last 15 minutes of the day. That's when institutions are securing their position, selling their position, taking profit. At the beginning of the day, they know exactly what they're going into. So if they're bullish the market, they're going to buy it open, then they're going to let it play out. And then at the end of the day, when it's up here, because institutions are right, because they're thieves, they're going to sell and take profit and move on to the next day. That's how some of them trade. Yes, I'm not talking about the ones that are hedge funds and this fund, that fund. They take longer positions. There's a woman on CNBC. She's always bullish no matter what. On the way down, she's bullish. On the way up, she's bullish. She has to be bullish because that is what her fund does. All right, so SPY, we're at 390. We broke 393. We closed at 394. We hit 395. That's not a resistance level. 397 is the next resistance level. So if you are bullish the market, and I'm going to give you both case scenarios today. And again, I'm untrusting. I will be a watcher on the side. I have one bearish position right now. I'm going to hold on to that till at least over the weekend. Why? Because I looked at the algorithms on that, and it has a bearish divergence, meaning the price for puts is up here, the stock price is up here, the call price is down here. Generally, when that happens, the stock price comes down and there's a medium equilibrium right here in the middle. So I believe the stock price is going down. So I'm in a bearish position. If the market's strong today, so be it. If they want to buy up a firm, and the volume could be strong too, but understand how much money is on the sidelines. How much money, like myself, says, okay, I'm just going to wait it out. I'll wait it out. I don't need to chase what happened yesterday, because that's what they would be doing. They'd be chasing yesterday's movement. So if you're a big money on the sidelines, you're like, I missed yesterday. Geez, that sucks. Am I going to buy in today? All right. So do we have any questions today that anybody wants to ask? I see someone about crypto. Yeah, crypto's in trouble. I don't want to be, I'm not definitely not the first person to say that. And I like crypto. So please, but I don't own any crypto, nor would I own any crypto. And if I did own crypto, I wouldn't even know what platform to use, because I wouldn't trust any of the platforms. All I read this morning on Twitter was this platform did this. FTX lent out half of their users' money to some other company or platform. I don't know what they were doing there. Obviously, if there was no crypto bubble or burst, right, then nobody would do mass withdrawals. It's the same way a pyramid scheme works. A pyramid scheme works until the top, and then all of a sudden you run out of money because no one's joining the pyramid and people are exiting the pyramid, and the pyramid crumbles down. Unfortunately, that's what crypto is. Crypto started out with a purpose. Then everybody was creating a coin. And FTX's problem was FTX has their company. Then they had another company called FTT or something like that. And they had their own tokens. So they were basically funding a bank. So it'd be like if I started a bank called Matt's Bank and I funded it with Matt's dollars. Well, it doesn't mean anything. It could have like 1 billion Matt's dollars, but that doesn't pay people that actually want real money. So the problem with crypto is I wouldn't know who to trust. I'm sure there are some golden coins out there that are going to do very well. But please, I made a video like a year ago. Make sure your coins, your tokens have a solid purpose. They have a solid demand. Let's look what happened to, let's use Meta or Facebook, all right? Zuckerberg apologized to everybody, and Meta looks great, right? The chart was like 94, and now it's like 110. It was up like 5% yesterday. Do I trust Meta? No, I mentioned yesterday, Meta could run back to like 123. It wouldn't surprise me. But if I had to go out a month, okay, I would say Meta is probably going to be lower down than where it is now. Same with Apple. When Apple's having this run, I was like, if the market keeps bullish, Apple could run to 156. But if you ask me in a month, Apple will probably be between 140 and 145, exactly where it is now. It's crazy how that happens. And if you don't believe me, test it out. Hey, there's another question. Oh, Saidu. Funny, some lady I used to work with does all the marketing for Saidu. I haven't looked at the company in quite some time. They're an aeronautics company. They won a contract or two. I don't know. Yeah, they don't seem to have much volume. Their market cap's 30 million, which is not good at all. So, the good news is Saidu could win a contract and the stock could explode to $7 or $9. However, if they don't have any news in the next year, you could lose like 50%. The stock is what? 167. What happens if it goes down to 115? There's no volume. When there's no volume, if there's a big stockholder, the big stockholder can sell. If there's only under 1 million shares and I own $5 million worth of company, how the heck am I going to get rid of 3 million shares? Unless I'm trading on the dark pools. And I mentioned that yesterday. Half of the trades go on the dark pool. When we all see stocks going up and down, understand 50% of the money is coming from the dark pool. Meaning, if someone's buying a large position, they're not doing it in the open market. They're not pushing the price up. And if they're unloading a stock, we're not knowing about it. They're not pushing the price or the SPY down. They're unloading it to somebody else that's willing to buy it at that price. All right, next questions. Oh, man. I think there's a question there. My thing's very okay. If SPY 397 is broke, do I think we will see 4-1 today? Oh, did I not talk about what we're going to see today? Jeez, I got off track. Okay, so bull case scenario. Here we are. We're at 395 or 394 on the SPY. Next level up is 397 on the SPY. Then you have 401. So if we see a powerful day, and not like yesterday, it doesn't need to be like yesterday. It needs to be a follow-up to yesterday. Like, you shut out a team 41-0, then you follow it up with like a 34-17 win. So it's a good, strong day. If you see a good, strong day, you could see the SPY go up 1.5%. If the SPY goes up 1.5%, that's about 6 points. that would take you slightly over 401. If I was going to guess the top, and that would be a bull case scenario, and understand I'm not a bull and I'm not trading with emotion. And right now, if I had to pick a market direction, it really should go down. But again, that's me zooming out. It might take a few days. I'm generally early. Bull case scenario, SPY top today, $401.50. And if I get very close to that, please come back and join me tomorrow. Let's talk about a bear case scenario, okay? Okay, we'll do this first, then remind me about bear case. Actually, let's get this off because I'll forget about the bear case scenario. I want to be fair to everybody. Bear case scenario is, hey, holy crap, the market went up so big yesterday, 7% on the NASDAQ. Oh, those stocks that Matt mentioned before, some of them went up 20%. I reeled them off before, right? Rivian, 17%, Plug, 17%, Apple, 9%, AMC, 18%, Affirm, 24%, Upstart, 27%, Roblox, like 10%. So understand there could be some consolidation. So this is the bear case scenario. The bear case scenario is there was short covering, there was FOMO chasing, there was retail chasing, there was institutional that knew they would get fired if they missed out on a bull run, so they got involved in the market. And they're the same people that are probably trying to manipulate the market. I haven't spoken about manipulation in a while, but that shit happens every day, manipulation. Understand, in my days of being on Wall Street, stocks used to move 2 points or something to that extent. These days, they move like 20 points. That never happened. Okay, so what am I thinking about those stocks? Okay, bear case scenario. So we're going down. 390 would be the next support level. Again, 393. We broke past really quickly, so I wouldn't really worry about that. If we were going down, I'd really look for the market to bounce at 390. If it doesn't hold 390, you're looking at 385 next. Again, so zooming out, I can definitely see that happening. However, today, I really don't know. I mean, the market looks so strong. I could definitely see a spike at open, a quick sell-off, and then the market has to decide. Thoughts on the Russell today and midweek next week. So the Russell, which is the IWM, is like smaller cap stocks. So it's interesting. Smaller cap stocks are like the ones that I mentioned, Affirm, Roblox, generally more speculative plays, and they've been ripping. So yes, if I thought there was going to be some consolidation, I would be wary of the IWM, the Russell. But again, please, you don't want to fight momentum, because fighting momentum in the market gets you in trouble. When the market's getting stronger and you're like, I think it should go down, and you're buying options because you think it's going to go down, your account's going to go down. So please wait. Again, my best trades are after 11 a.m. My best trades are generally like 2:30, 3 p.m. All right, another questions? Yes, Amazon has a gap to fill to the upside from earnings, but also Amazon, I mean, gaps get filled. So Amazon's gap could take 3 months to get filled. It could take 4 months. It could take 9 months to get filled. I've seen companies take years to fill gaps. However, when it comes to the SPY, gaps get filled. So that's why I was focused on the SPY and the two gaps we saw on the SPY, because even if the first one at 357 or 53.58 doesn't get filled, then you're still going to fill the one that we just saw yesterday morning. And again, not a surprise that we're probably gapping up a little this morning. Yeah, we're up $2 on the SPY, so that's probably like 0.48%, something to that extent. If you have any stocks you want to talk about, please let me know. Yeah, 0.5% on the SPY right now. I mean, I have a short position in Rivian. I don't mind talking about it because I might be wrong about it, but I hope not. But Rivian had bearish divergence. I could show everybody, probably, if you guys want, I'll show you what I'm talking about if I can. Let me just see if I'm smart enough to add it to the stream. Stop sharing, present, share screen. And I'll show you what I mean by bearish divergence. So when you hear people talking about it, you'll understand, because people are like, what the hell does that mean, bearish divergence? Okay, so this is our, oh, I didn't join it yet. Okay, this is our Discord. I'm going to find my way over in Discord because I'm on a laptop right now, and that's me talking about it. But I'll go down. No, it's probably up. It's probably towards the top. Here we go. Flows and algos. So I think somebody already typed it out for me, so I'm going to look for it. These are just insiders, right? Big watch. Someone looked at the dark pool of Apple, the net flow of Apple. So if we're looking at the net flow of Apple, I'll just use Apple as an example, okay? Let me make it a full screen for everybody, as full as I can make it, and I'll explain what these mean, okay? The white line towards the top is the price of Apple, okay? The green line in the middle is the cost or premium for calls. So you can see as the price was going up, people started paying more for the call options. Then you could also see the volume in the background. The cost of the red, which are the puts, has gone down. Now, what will likely happen is all these lines tend to meet up at some point or another. These will tend to meet up. So if you understand that the price, the white and the green, are way above the red, then given a couple of days, maybe a week, things will come and even out. And that's why I believe Apple will be right back down between $142 and $144. And that's just my Apple example. Now we'll get rid of Apple. I'm going to show you what I mean. Somebody else was looking at Apple. They were looking at different charts. I mean, there are so many ways you can use this. And if you don't want to hear me talk all day, then guess what? You could just pay $25 and get, this is Veru, which got sunk, big trades. Again, I only look at, again, algo. Okay, so you can see the algos right there. God, where is this? Oh, Rivian, here we go. Perfect. All right, so let me get it up there for you guys. Okay, so what you can see is this is the algo flow. So the flow of the algorithms, which tell us where the computer thinks the stock price should be versus where the price is. So the price you can see is in yellow, but the computer thinks it should be down here. So even if this red line comes up closer to 0 or closer to here where my cursor is at minus a little, somewhere like $32 and change, the stock price would have to come down. Now, if the market gets sold at any point, then it could come down further. But that's kind of things I look for. I look for divergence. If the stock price is up here, the cost for premiums is up here for calls, and for puts is up here, then there's no divergence because everything's at the top. But if like the cost for calls is down here, so nobody wants calls for a stock. Nobody wants calls. The cost for puts is up here and the stock price is up here. If nobody wants calls and people are paying a lot for the puts, generally the stock price goes down and they all meet in the middle. So that's how you can simplify it. And there are so many commands. You could look like big flows, unusual flows. When people follow unusual whales or other people, I mean, that's what they're doing, but they're giving you strict data. I want people to have their own search. I saw somebody ask about DraftKings. Saw somebody ask about Neo. You know what you do? You type in, I mean, we could do it together. What's the question? DraftKings. Let's do one together. Let me pull it up. I'll give you the full screen, okay? Let me add it. I did add it. I'm smart. There we go. Let me go and do the flow for DraftKings. So we do TR. Let's look at the net flow for DraftKings. What is it? DNKG? Yeah, DKing, right? Is that DKing? Did I not get the DraftKings wrong? Let me look up the symbol real quick. I could definitely see myself missing a letter. Either that or DKNG. DKNG. Yeah, of course. DKNG. Okay, so DKNG. Net flow, DKNG, DKNG. There we go. And then I would look at, okay, so you can see, let me blow it up. You can see the price is up here. The cost for calls is up here. The cost for puts is down here. It's been a steady flow. So it tells me whatever's been going on looks to continue on that chart. But let's look at flow sum, right? The sum of flows for GKNG. Anyway, there are so many options you can look at. Okay, you can see going into a few days ago, people were extremely bearish. Then it flipped. Now it's kind of even. You can see the open interest is over 2-to-1 calls. The volume's over 2-to-1, and the premium's over 2-to-1. So it actually makes sense. It's telling me DraftKings is going to follow the market, whichever way the market goes. So I don't see anything special with DraftKings, but that's what I would look at. Does anybody else have another one? Hey, thanks. If you could do one more for SoFi. Okay, I could do that for SoFi, and I will. But let me explain SoFi real quick. The courts, and I think it happened yesterday night at 7 p.m., the courts in Texas struck down Biden's forgiveness rule that all these college students were going to get forgiven $10,000. So I know that has a direct effect on SoFi. But yes, we can look at the flows. We can look at where big money is. So we'll go to Discord. And you guys can join. It's right below. There's a link. You join for 7 days. At least you can see what big money is doing. So I'll type in TR. Let's type in the net flow. And we're looking at SoFi, right? And what's SoFi? Under $5, right? So here it is. The cost. Okay, let's make it nice and big. Exactly what I thought. The continued cost, you can see it from starting back here, of puts has always been towards the top. The cost of calls keeps getting worse and worse. It hasn't flipped yet. So it's telling me SoFi will likely struggle. The price right here, the white line, will likely come down a little to meet the green line and could even supersede it if it continues red. Now, if the market's extremely strong, then of course SoFi can reverse. But if not, then you're seeing what you're going to see. Okay, I see what Johnny. What do you want, Johnny? I see something. Hey, thanks. Oh, hey, Mike. How you doing? Mike's a lifetime member. Mike, aren't you in California though? Wouldn't it be so much? My question is, what do I think about debt spreads? I mean, everybody has their own trading strategy. So if that's one of your strategy, then that's fine. As far as, let's just flip it, because I want to talk about credit card debt. I spoke about it earlier. People have credit card debt that's going through the roof. The average American goes up. So what's happening? End of year, Christmas. Well, everybody had a tough year. What do they want to do? Spend. When are we going to see recession and people struggling to pay their credit cards? Next year. So it might take 6 months. Okay. Let's see what else we can do. What other stock? Tesla keep dropping like some other stocks. Let's look at Tesla because Tesla has dropped a lot. So let's just see where big money is. So how do we know where big money goes? Great question. Watch this. What's it called? Like Big Flow, right? I hope it's called Big Flow. I might have just made that up. There's Big Flow. So here's all the big flows, the biggest flows from yesterday. Holy cow, man. You mean you can get that all for free? Well, yeah. I mean, you could pay $25 if you don't want to hear me every day, or you could join our Discord. But let's see. There's a $13 million number that was a put at 1 p.m. yesterday. The stock price was 187. But the dude's wrong. Tesla's at 190 now, 194. But look, they all did it while it was here. You had two calls, 188, 190. But these are pretty large positions. Understand, look when they expire. November 18th, right? We have a little time there. January. So what does that tell me? And this person bought at 230. So they want it in the money. They want immediate gratification. It expires 11/18. That's 1 week. So in 1 week, where do I think Tesla will be 1 week from today? Easy. Based on those numbers right there, bump down. So yes, the market could run today. That sums it up right there. The market could run today, but based on me sharing with you all these Tesla numbers, big money, right? All this money here on Tesla. Tesla in 1 week is going to be down from where it is right now. So let me just see where we're here. Tesla. I can't wait to do this. It's a great prediction. And this is good. If I'm correct, you visit me. Tesla closed at 190.72, okay? 190.72. It was at 177 the other day. It was 180 yesterday, but it was 177 the day before. And it might have been 175 the day before. So at 187, let's even say 187, okay? Because it's down pre-market. No, it's 188 pre-market. Let's say 188. 190 is so much easier. But 188, in a week from now, it's going to be down at some point. Now, it could go down and bounce back up. But at some point, all those millions of dollars that I just showed you on our Discord right here, they're going to secure profit. So let me blow that up again. Hopefully that is blowing up. I mean, it's so small. Yeah, it's blowing up. So right here, I mean, you're talking about, and I'll reverse out the good money. The good money is $7 million. So we'll do 17, 21. We'll reverse out the 7, 27, 30, $36 million. So of $36 million of action yesterday on Tesla was negative. There was 42 million negative, 6 million positive, a negative ratio of what I just told you. So big money is usually right. Yes, it could be a hedge. Here's what could happen. Hedge funds that have $10 million worth of Tesla stock could have took $1 million hedge on Tesla because it was so booming yesterday. I don't know. Or people just think Elon's going to buy more stock and it's going down. Please, if you haven't hit the like button, please hit the like button. We have that. We have the Moomoo link below. If I haven't explained Moomoo, I'm dropping a video in about a minute, or maybe it's dropped after we're done here. Please check it out because it's free money. Anybody that's here, you've got to like free money. And I'll explain real quick. You join Moomoo. You don't have an account there. Open up a new account. $100 you deposit. You get $40 free money. I'll explain the breakdown real quick. Again, I have a video dropping like right now, but you get a $10 coupon. You subscribe by December 20th. You deposit $100 by December 20th. $10 coupon. There's 10%. You get 5 free stocks. My free stocks were shitty free stocks, and they still added up to $30. You can get a share of Coin, a share of Bank of America, a share of Apple, much more than my stocks. I had shitty 5 stocks, $30, $10 coupon, $40. If you're a new trader and you put in $100 and you want to watch me for a month or join Discord free for 7 days and play around for 7 days, Do it with $100. Join Moomoo. Follow me on Moomoo. Join Moomoo. Don't trade. Don't trade for a full month or two. I don't care. Paper trade in your mind, but you're going to have an extra $140. So if you put in 100, you have $40 extra trading money. Oh yeah, the other morning I mentioned Tesla's forward PE. How do I analyze the forward PE? Easy. It's on your charts. Forward PE is you take your price versus forward earning. Their current PE is price over their current earnings. So if they're going to earn more next year, you'll see the PE go down. If they're going to earn less next year, it means the PE is going to go up. You know, stocks that Tesla used to have a PE of like 3,000. So understand when I'm talking about a PE of like 72 versus 42, companies generally in the SPY have a range like Google, Microsoft, usually 17. During the market's hype, they went up to like 50, 60, 70. Then they went down. If you look at Meta or Facebook, as it was called, their PE is probably like 10 or 11. That's why people are storming to Meta saying there's true value there. But if Meta doesn't have earnings, guess what? I mean, if Meta disappoints again, and they haven't got it right each time I think Meta might beat because I'm like, Zuckerberg's a freaking genius. And each time they're like, no, we still haven't figured it out. No one's playing in the metaverse. I'm like, okay, yeah, obviously I haven't even heard of the metaverse really. I mean, okay, let's go. Another stocks. Go, Andre. So here's the thing about Vero. I showed you somebody on our Discord was checking that out. I'll show you again. The reason I don't deal with Vero, okay, somebody just looked at Microsoft. You look at Microsoft today. What do you see here from yesterday? Can you guys see that? It looks a little green. That actually makes me nervous about tech right now. NVIDIA looks green. AMD looks red. So there is definitely a mix. Google looks green. So, yeah, I mean, they're playing big tech. But we saw the way everything ended yesterday. I'm mentioning Veru because it was up here. That's what I'm looking for right now. And Veru is not an active stock, meaning it doesn't have a lot of volume. So I stay away with stocks without volume. Like here it is. You can see calls haven't really changed. So the price of calls haven't changed. The price of puts have gone up a little. Stock price hasn't moved all that much and doesn't look like anything crazy. And it's telling me that there's no real plan for like a short squeeze. Here we go. Here's another one. So if you look at all the unusual flow, and yeah, you can type in unusual flow, same way. You can see somebody bought a put yesterday at 1:50 p.m. 17 minutes before, people bought calls. Volume 60. That because there was open interest before that was one contract. There was one contract of open interest. Somebody bought 294 here in a sweep. So at this point, they thought it was going down from 1:51 p.m. I don't know if they were right or not. But again, it was one person. It's one trading activity. So yeah, I would stay away from that. But yes, here's where you could type in unusual, TR unusual, and then whatever stock, and you can see the unusual activity for your stock. So that's why it's there. So again, I'm not telling people to. I give my guidance. Hey, here's what I'm thinking. And I'm right a lot of the time, and my strategy is good. And sometimes I'm early. And some people use me as a watch list. Hey, Matt's in, he's down 20%. I'm going to go in with one contract. Great trading strategy. If I'm down 20% and then I pull out even or something like that, but that's how some people do. Other people, they like the rooms. They like to discuss their trades and hear people's feedback. Great. Because if you're making a trade rather than those message boards where people are like, dude, you're such a clown. And you're like calling me a clown because it's opposite. You could do it with other people that are actually like-minded. And then you can use the flow and algos, which I'm on all the time. In fact, I look at what other people are looking at. So it's not even like I have to type in stuff. I go down there and I'm like, oh, wow, she's really smart. Wow, she's looking at AMD and NVIDIA. She must be interested in chips today. Let me reach out to her and say, hey, what are you thinking about chips today? Because they probably have a mindset. Would I tell the cop of our carnival? No, I wouldn't call the top of carnival. Dude, I got to go. Discord's calling me. Spent a lot of time here. Please join me on Monday. If you like me today, give a thumbs up if you're still here. I would appreciate it. YouTube algorithms, everything. And I will be back on Monday. Oh, yeah. So watch the new video. The link's going to be below, which is great. But again, new traders, old traders, open up an account, $100. Don't even trade it. Make sure you click on the rewards button to claim your $10 coupon and your free stocks. You don't have to do anything. It's $40. You could sit there for 2 months and withdraw all your money. I wouldn't suggest that because you get 7 free days on my Discord and we can make money together. But whatever. I'm going to start next week again. Same way I start every week. Have a good weekend, everybody. See you guys later.